Today, I'm going to be talking about AI in financial services or applications of artificial intelligence in the financial services sector, which, as we'll see, is a very rapidly growing area. Just a little bit about me before we get started. I am the co-founder and chief data scientist at Synaptic. I've been doing AI and machine learning for a really, really long time. So I started a PhD program back in 2001. And I have been working as a professor, teaching classes in artificial intelligence, doing research, publishing papers. But I've also done a lot of work in terms of helping organizations figure out how to apply AI and machine learning to business problems. I've worked with more than 100 clients at Synaptic as those businesses try and figure out their data and AI future. So, as I said, I got my PhD in computer science from UMass Amherst, and I spent a year as a postdoc at the MIT AI lab. So, just briefly about Synaptic, back when the company was formed more than 10 years ago, we did a lot of fixed price projects where a company would come to us and say, "Hey, we've got data. We think it could make money for us and or solve problems for us in a certain way." We would do the AI and the machine learning work. We would hand it over to them, and that would be the end of it. But as the technologies become more pervasive and more powerful, people are building systems that are going to interact with customers or demanding internal users. And so we've started biting off bigger pieces of that pipeline. We do a lot of data engineering work. How do we get large volumes of data into a central location so that we can apply the algorithms? And then also on the other end, user experience work. How do users interact with the systems that are producing insights based on AI and machine learning? So we think of ourselves as an intelligent products company these days. So what are we going to talk about? One is why AI now in financial services. It turns out that financial services has, as a sector, has been using AI for a while, but the modern large language model revolution is really accelerating that. So we'll also look at four high value use cases. There'll be fraud detection and financial crime, underwriting or assessing, credit and risk decisions, customer service and operations, and then compliance and regulatory operations. I'll finish out after I go through the use cases by talking about risk and governance. Sort of if you're in the financial services sector, what are the risks involved with using AI systems? And I'll talk a little bit as I go through it about how to mitigate some of those. And then at the very end, I'll have a slide on, how do you think about getting started if you're in the financial services sector and you want to apply AI and machine learning. So, first of all, why does it matter now in financial services? Why think about AI now, in particular in this sector? So, the World Economic Forum, in collaboration with Accenture, put out this white paper in January of last year thinking about exactly this topic. And what they found was that about 35% of the work performed across capital markets, insurance, and banking, right? So basically, the entire financial services sector has high potential to be fully automated, as in we can make 35% of the work just go away by handing it over to machines. And then an additional kind of 35% has high augmentation potential. So there are lots and lots of opportunities for efficiencies and cost savings here. The report also said that in 2023, financial services firms spent about 35 billion on AI, and that's projected to reach 97 billion by just next year. So very rapid increase. There's lots of potential and a lot of investment. Just for comparison, if you sort of look at this chart across industries, the dark blue bar is high potential for automation. The next lighter color of blue is high potential for augmentation and then lower potential. And then these like non-language tasks. So obviously everybody's thinking about large language models in this context. So banking, insurance, capital markets, software is a big one. That's an area where there's a ton of data that the large language models have access to. And so, you can see that financial services are all sort of clustered near the top in this particular chart. Here's another way to look at it, which I think is super interesting. So, on this axis, we've got AI platforms spend as a fraction of total revenue. And so you're spending more as a fraction of total revenue as you move to the right. And then, growth in AI platform spend from 2023 to 2024 is here. And so if you're a big player, you're hanging out here on the right-hand side, right? You're spending a sort of a larger fraction of your total revenue, and you are growing it year over year. And so again, financial services is hanging out right there. Information technology is a big one. And again, you can see the financial services are really standing out in terms of how much money is being spent. So, where is AI creating value today? The US Department of the Treasury also put out a report on artificial intelligence and financial services. And there are sort of these like kind of four areas, which is sort of growing the business. So, can I do better underwriting? Can I make better decisions about who I lend credit to? Can I give personalized advice and thereby have sort of stronger customer service? Financial services is an area where crime is rampant. So there's a lot of incentives to be able to commit crime in this area. So fraud prevention, anti-money laundering, CFT is countering financial terrorism. Sorry, that acronym always escaped me, but it's about sorry, countering financing of terrorism. And then identity assurance. How can I be sure that people are who they say they are? Also, on the operations side, you want to automate things, you want to do better reporting, you want to speed up workflows. And on the augmentation side, a lot of what happens in financial services is documents are flowing around. So, can I help humans understand big, complicated documents? Can I summarize them? Can I help people who are knowledge workers, right? Who have to sort of combine information from lots of different sources to do their jobs better. And so, according to the Department of the Treasury, we're seeing impact in sort of all those areas. So now I just want to go through the four use cases. One is fraud detection and financial crime. And, basically a lot of that work corresponds to, can I spot behavior that is anomalous? So we've all gotten texts from our bank at one point or another that said, hey, you just spent this much money on this thing at this store. Is that really you? And so they've all got algorithms that are running that are doing this thing. And then also, interestingly enough, because I've worked on a couple of projects in this space, there's a lot of interest in trying to find relationships across accounts, devices, and entities. So the way people in this space think about it is they think about the data as forming a graph. So you got a graph, which is you've got things. So here, for example, I've got credit cards and they've got credit card numbers. Those accounts, so maybe what I do is I've got an email address and I'm using that email address to log in. I'm using a credit card to make a particular purchase, right? And so I'm going to buy a product and it's going to have an amount. And then I might have a card type on that, right? It's a Visa or some other kind of card. And so there's a lot of interest in one, can I sort of take these transactions and just say, do I think they're fraudulent or not? But then also trying to figure out that, this credit card that's being used over here is associated with several email accounts. Or maybe this email account is using all of these credit cards. So a lot of the work in AI in this space, not involving language models, boils down to trying to do things on graphs. So I've got a graph of financial transactions. And there are a few different tasks that are used here. And the underlying technology these days tends to be a thing called a graph neural network. So it's just a neural network that instead of taking as input a vector of information about you as a patient to predict whether you're sick or not, it takes as input a graph. And you can train it up in the standard way, which is to say, here's a whole bunch of sets of financial transactions. These are fraudulent, these are not. Can I learn to classify graphs as to whether they embody fraudulent transactions? So there's graph classification. There's also node classification where I take a graph and I try and go, are these nodes fraudulent purchases or not? And then another one is link prediction, which is, you know what? Like this account over here and this account over here are engaging in behavior that's very similar. I think they might actually belong to the same person. So are there edges in that graph that I'm not observing, But if I observe them, they would tell me something about whether that thing is a fraudulent transaction or not. And then finally, there are algorithms for community detection, which basically say, let me find subsets of the things, the entities, and the edges that seem to be very tightly correlated. And those things might correspond to, for example, financial crime rings. So lots of work applied to graphs. We've actually done some work in the identity verification space at Synaptics. So we had a client named DCO. Um, they work in Mexico, and their original charter was that a lot of people in the country of Mexico just don't have access to the sort of standard financial system through banks. So what they would like to enable people to do is to have the advantages of having a bank account without having to actually sort of be at the bank or to go to the bank or have access to a bank. Lots of reasons why people tend to be unbanked a bit more in Mexico. So what they did was they created a mobile app and you would sign up for the app. It's sort of like going and, I'm going to open a banking account, but I'm going to do it in this mobile app. And so identity verification is then clearly going to be very important. So we worked on a couple of problems with them. One was what they would do is they would have a potential user shoot a short video of themselves. So I'm going to hold the phone, I'm going to shoot a video of my face, and we wanted to do face recognition to start with, right? So a very old kind of technology that's been around for a while. Interestingly enough, as we got into it, the number of data sets of people's faces that are available on the web, and there are many, tend to be, sort of Northern European descent. And so there weren't many data sets of people from Mexico, meaning that the face recognition algorithms tended to be biased and they performed poorly. So we did some data collection with the company. We also tried to look at detecting liveness. So what if I have a picture of you and I'm holding that picture in front of the phone? So I want to avoid spoofing using a photo. They were also interested in identifying the age, race, and gender of the individual because that can provide information about whether they are who they purport to be. And then finally, there are these really neat algorithms which from video can measure your heart rate. So you could just take a video of yourself, and what they do is they sort of magnify color changes. And it turns out that as your heart pumps and blood sort of flows, your face has these very slight changes in color. And if you know how, and there are algorithms that are published, you can sort of magnify those changes and measure heart rate. So we did that. The other thing that we did was there are many secure IDs in Mexico that have holograms on them. The idea being that those things are very hard to manufacture from other sources. And so we wrote code to identify the holograms and detect tampering and fakes, right? So if I shoot a video of my ID, I want to make sure that the hologram is there, that it's intact, and that I'm not trying to spoof it. So again, we've done work in that space. And another area where AI can be very useful is it can kind of just help keep up with fraud. So, one pervasive problem in this space is that the volume of transactions means that if you have even a tiny false positive rate where you say, this transaction is fraudulent when it's not, you can get overwhelmed. So, you get these very large alert volumes. And it goes back again to all of us at some point getting a text from our bank on the phone saying, I think somebody's committing fraud. And you're like, nope, that's me. I'm actually trying to buy that thing from Walmart today. So, what we can do is we can rank cases, and we've done work just like this in the past, not necessarily in the context of financial crime, but sort of other cases where you get a bunch of things. You want to rank them by their risk and urgency, and then just surface them to humans so that the humans can go after the ones that are most likely to be problematic. And then also, we're in an arms race. So fraudsters are using AI. They're getting much more sophisticated using these tools and technologies. And so financial institutions are having to use AI-enabled defenses to keep pace, right? Because if they don't, they're going to get left behind. Okay, use case two is underwriting and credit and risk decisions. So, underwriting is just this process of saying basically, I'm a financial institution. Should I give money to this person or this entity? Do I believe they're going to pay me back? Is this going to be a profitable transaction? There's a lot of interest in underwriting and risk. So there's a McKinsey and Company study looks like it's talking about Gen AI just in general, but it's actually Gen AI for underwriting and risk. And 80% of the companies expect to have some Gen AI technology within a year in this area of underwriting. So there are a lot of applications, right? So basically, if you've ever gone to the loan and applied for a bank, you got to fill out all kinds of forms, right? So you fill out a form. They have these application forms. There are bank statements, tax documents, other kinds of records. And you can imagine that this gets much more complicated when it's a company seeking financing from a bank, for example. And so, in particular, large language models, and I'll talk about that in just a second, can help you sort of gather the information and pull it together. It can reduce manual rekeying and sort of making errors, and it just improves speed on high volume cases. And the reason is because large language models, the sweet spot for them is document processing. They are language models after all. So, anywhere where there are idiosyncrasies, when there's variation due to text or the way things are worded, language models are going to help. On the other side, you can do a better job of risk assessment. So that's a case where, I'm looking at an application and I've extracted some data. Can I score that in some way? And can I help underwriters focus on the factors or the features that are most likely to affect the decision? And so on that side of the world, you're much more in sort of a supervised learning framework where you've got past applications and was the loan paid back or not, for example, right? Now, again, in many cases, there's this sort of significant data imbalance where, most people pay off their loan, some fraction don't, some are credit worthy, some are not. And so you really have to work hard in a supervised learning setting to make sure that class imbalance, that data imbalance doesn't harm you. And it's important to keep the human in the loop. So, this is an area, especially with large language models, as I described on the left. What the language model is doing is it's helping you sort of pull information and summarize, help you work through large volumes of documents, but it's not making decisions for you. On the scoring side, again, what's going on is you have an algorithm that's saying like, hey, I think you need to be careful about this particular application, but you're still going to make the decision. And I think financial services is an area where that sort of human in the loop or that human judgment is going to be very important. So the third use case is customer service and operations. This is spans sort of all industries. It's not, entirely um, it's sort of entirely about financial services. But if you think about, kind of like when you call your bank or when you call sort of any, institution and you're trying to get customer service, the complaints tend to be kind of inconsistent communication across channels. Here's a survey, 65% said that at least in particular financial services, that was a problem. And I think about this all the time when I call, my bank or some other institution. They ask all kinds of information in an automated phone tree and go, okay, I'm going to hand you over to a human, and the human asks all the same information again. It's remarkably frustrating. So there are gaps in real-time updates, right? I'm not getting information quickly enough. Long wait times. I actually called an airline the other day, and the automated voice said your wait time is estimated to be longer than 90 minutes. I hung on. Actually, I got service after 45 minutes. And then, 24% of us are happy with those contact center interactions, which is not very much. So applications include things like customer support. So, you can imagine a support agent that during a call or a chat or an email interaction, you've got an AI agent sitting there sort of watching, surfacing documents. Oh, you're calling about this particular policy. Let me pull that policy up. Let me look at the customer history. Let me look at the information about that particular investment. You can also think about, suggesting next actions for routine service requests. So, oh, this customer is asking about how to open a bank account for their child. Let me go look that information up and provide it. And then it just increases response speed. So when you've got somebody looking over your shoulder, surfacing the relevant information, you tend to be faster because you're not going out looking for it manually, and things tend to be more consistent because everybody's looking at the same information. And then on the operational side, There's summarization of cases and complaints and prior interactions. Document handling is going to be faster. If you have repetitive high volume workflows, you can reduce manual effort and you'll just be faster in terms of, turnaround time and service and operations teams. So these applications are actually a sweet spot because the volumes tend to be high. Customers are calling. If I'm a big company like an airline, I'm going to have a ton of people on the phone, lots of volume, and it's easy to measure. How long do people spend waiting? A lot of the tasks tend to be repetitive. So, I think the thing I was calling the airline about, they probably deal with that a lot, but they needed some context. And it turns out that the person asking me a question got me to a faster resolution. You tend to be able to improve quality and speed, but you don't have to take over the final judgment, right? So I can sort of plow through things faster, but I'm not automating the entire thing. So the humans remain responsible for exceptions, decisions, and accountability. So it's like really, it's kind of a sweet spot for Gen AI. And then the final use case is compliance and regulatory operations. So where is the value there? So again, compliance and regulatory operations means there are a ton of laws, which is probably a good thing, that control how financial institutions operate. And so, you get better triage. You can sort through larger volumes of alerts. So we feel like there's some non-compliant thing going on over here. Let me let the LLM sort through those things and rank them. You can also get faster investigations because you're finding the relevant customer data and transactions and the policy content faster. Less manual review. That is, I've got these sort of long documents and I need to assemble a case summary. The AIs can do that. Again, it's going to be more consistent because you're kind of standardizing what information people are looking at and how, and you can do it more quickly, right? You can react to regulatory updates and policy changes and audit requests much more quickly. So, for example, a transaction monitoring team could use AI to rank alerts so investigators don't have to work through the queues in just chronological order. A KYC, a Know Your Customer team, can use AI to extract and summarize information from onboarding documents. Compliance officers can use a retrieval assistant to find documents, and AI can assemble drafts of responses to audits and generate evidence packages, right? So again, lots and lots of ways in which AI can help you, not take over all of the work. All right, so what are the risks that are associated here? So this, again, was a summary of the key risks from a study, and I'll have to post the link where I got that. It was from one of the sources that I cited earlier. I apologize for not having the citation here, but the risk associated with AI tend to be things like herding and market concentration, right? If everybody's getting the same advice about investments, then people are all going to sort of flow into the same area. There could also be vendor concentration. So, a particular vendor has the best AI technology and people are going to flock to that. The markets get to be a little bit more fragile, and if they're being, run by machines, and that tends to be able to be exploited. There are cyber risks, again, to the extent that so humans are susceptible to phishing schemes and things like that. But as the infrastructure that is running larger and larger amounts of the financial services industry lives in the cloud, for example, and then interestingly, job replacement is sort of thought to be, lower on. Other risks related more to the technology. If I've got a large language model that's giving me advice or summarizing things, like I don't, nobody knows, right? So how is it doing it? You can ask it questions. Why did you say that? But sort of explainability of why is it surfacing this information tends to be much more of an art than a science. Hallucinations, that is generating information that is not real and is not supported by the documents. That's thought to be a risk. I will say though, in you know, in my experience, so this notion of hallucination, that's a very like catchy term and it's stuck around, but I think that the systems are getting much better and there are all kinds of ways of trying to minimize hallucinations. It can be costly, right? So now actually the sort of coin of the realm is tokens. How much information am I sending back and forth? How many tokens am I sending back and forth? And so just sort of lots of risks around the technology itself. Okay. So just a few concluding thoughts, and it really is kind of like, how do you get started? So it's definitely the case that we have worked with companies before, and they're interested in getting, some AI initiative off the ground. And someone in the company goes, nope, we got to get our data all in order, right? We've got to get it all into a data lake. We got to clean it up. Our data's got some problems. Let's do that, and then we'll start in a year. In my experience, it's better to pick a single workflow. So don't necessarily think about I'm embarking on this giant AI transformation. Because what typically happens in those cases is everybody's gung-ho early on, and an AI transformation across an entire organization takes time. And if what you're doing is you're sort of investing all this time in a day, like which sometimes is a very good thing to do, you have got to be aware that it's going to take longer to get to the point where you see the pop from the AI. So I think a very effective way to go if what you want to do is kind of bring along the executives, for example, and show ROI, is pick a workflow and then pick a very clear KPI. Here's a thing that we're going to measure. We are going to reduce wait times at our call center by 20%, or we are going to catch 10% more fraudulent transactions, right? So a clear KPI that's connected to some return on investment that you can easily measure so the story you tell is completely unambiguous. Then, you got to think about the data availability. Who owns the data? Is it available? Do I need to, build sort of a data pond? Like not all the data, but, I probably am going to have to do some work on the data. I think starting with a human in the loop approach makes a whole lot of sense. So, we'll have an AI system, it's doing something, it is helping us speed up a workflow, there's a KPI, but at least early on, I'm going to let a human kind of sit on top of it and at a minimum go, yep, 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 nope. Right. So providing feedback and making sure that you're assessing from a human perspective how well it's working. Um, and then, like let's measure quality, speed, and have we increased our risk in some other way, right? So you need to make sure that, improving this KPI, that is, for example, yeah, our customers are getting out of the call center queue faster, but their satisfaction scores are lower, right? That's not a good outcome. And so, finally, I don't know why there's not a bullet there, build toward production from the pilot. So build a pilot, get people excited about it, show that it can actually impact this KPI without damaging other measures, and then sort of push it towards production. And I think that's an area where we'll tend to see, or we can see, um, projects fall off because people are all excited. We got this pilot, but then to get it to production, it's another bit of a slog, right? So there's a big difference between a pilot that looks good and people feel good about and have something that's going to run at scale for a very long time and be maintainable. And so you sort of have to make sure that the sort of backing from the executives, both in terms of enthusiasm and financing, is there. And then I think it's also useful to find a trusted partner. So we talked to lots of companies that are obviously deep experts in what they do. They want to get involved in using AI technologies because it's clear that the technologies these days can be force multipliers and that they can help the business, but they're not sure how to get started. And so I think if you find a partner that you trust that has deep experience on the AI side, they can sort of work with you to move forward in that effort. So, okay, that's all I had to say today. I appreciate you listening. Thank you very much.